where my man, Sam Gituku, is standing by with a whole host of guests, including the CS for Treasury. Gituks, take it away.
Right, thank you, Jeff, for getting to us. And it's time that we want to have that conversation about what's happening in the management of the country's affairs when it comes to questions of economy, but also the tax policies in the country. I want to introduce the panelists here that we have from Daystar University. We have the Commissioner General of the Kenya Revenue Authority, Humphrey Watanga. Good evening. We have Dr. Chris Kipto, the Principal Secretary, National Treasury. Good evening. Good evening. We have Waziri John Badi, Cabinet Secretary, National Treasury. Good evening, Waziri.
Good evening, Sam.
We have Christine Kahema, Director, Alpha Tax and Business Advisory Services, but also a member of ISPAC. Good evening.
Good evening.
And we have CPA Kuria Kimani, the Chairperson of the Finance and Planning Committee. Good evening, Chairman.
Good evening, Sam.
Great. And we're going to have a conversation because just recently there has been proposals that have been presented to Parliament on Business Laws Amendment Bill 2024, Tax Laws Amendment Bill 2024, Tax Procedures Amendment Bill 2024, and Public Finance Amendment Bill 2024. But Waziri and panelists, we also joined by different members of the audience, all the way from members of expertise, that is professional organizations, the experts in their own right. We also have representatives from a cross-section of the society. Some of them are businessmen, business persons, traders, border riders, and so many others that are represented here. They'll be helping us walk the journey to understand where we are. But also we are receiving questions, including one who is saying, this is Dapper Brother, who is saying that the taxes are already collected. For instance, this month, the pay slips were all over here with the deductions. The discussion should be based around what has been done so far with the collected taxes. Shift deductions were made. Are patients getting treated? Of course, just to highlight some of the concerns that people have. Captain Amani is saying that Kenyans are the most overtaxed and overrepresented. Why this? Can the government explain? You'll also be telling us whether that is factual or is a feeling or perception. Morgan is saying that my question, why are you adding more taxes? The more you add tax, the less you collect. Why doesn't the government harmonize taxes, stop double taxing, and taxing anything and everything? Commissioner General, a few questions that you may want to address. Calvino is saying that what measures are KRA and the Treasury implementing to monitor the expanding shadow economy, which is increasingly burdening those informal sector in terms of taxation? And please ask the panelists who told them overtaxing salaried people will increase revenue collection. Salaried people have dependents and they are just making life miserable while business people like themselves are evading taxes. Let's be fair. I mean, these are views from Ben Moniki and so many others that we'll also be talking to. But Waziri, let's begin with the latest news, because there has been an election in the United States. We understand that Donald Trump is going to be president of the US. There has been an arrangement or conversations between the Kenyan government and the US government. The latest trip by the president to the US to meet President Biden in May spoke about questions of supporting the Kenyan government in management of debt. Does anything change with this change?
Thank you very much, Sam. And let me first start by appreciating those who have come, Kenyans who have come to participate in these discussions, and also Kenyans who are watching us out there, and also those who are probably not able to watch us but to listen to us. To be specific to your question, if you look at the American policy, it usually doesn't change much whether State House is won by a Republican or a Democrat. The policy around Africa, policy around economic engagement usually remains stable. So I don't expect any much shift depending on the outcome, which I think is now known. And I would congratulate the American people for conducting the election and electing Trump. Whether that was my wish or not is immaterial. It was a decision of the American people. So in terms of how they would support, it pretty remains the same. And by the way, presently, our engagement with the US government is more at multilateral level. The American government supports more the World Bank in terms of making contributions, and through that then we get some assistance through the multilateral relationship. It is usually very minimal in terms of bilateral, but even bilateral engagements would not be impaired or interfered with because of the outcome of the elections.
Interesting, and of course we'll be waiting to see how that impacts, of course, not just Kenya, but also the world. Now, let's get to the conversation here in the evening, and I'm sure you've had some of the reactions from members of the public on what they're asking when they learned that we were going to have this conversation. First of all, these these laws that are amending different laws that govern management of business, but also taxes, why this? And this is coming at a time that not long ago, I spoke to you and you said that there was no intention of the government to reintroduce Finance Bill 2024. If you look at some of those proposals, they mirror some of the provisions that are in the Finance Bill 2024.
Thank you, Sam. Sam, you know, I want to refer Kenyans back to Article 10 of the Constitution. One of the principles of good governance is transparency and accountability. And if you read Article 201 of the Constitution, which is under Chapter 12, the Public Finance Management, again, it speaks to transparency, accountability, integrity in terms of managing public finance. And therefore, the discussion today is anchored on those two principles. Executive's major role is to come up with policies and implement them. And National Treasury is part of the executive. We have to continuously look at our policies, especially policies that govern public finance management. And I would say that if you listen to the concerns that Kenyans have, the more reason you would support the initiative that Treasury has taken. And I want to repeat again that we are not reintroducing the Finance Bill of 2024. I said it before, I repeat it today, and even if you look at the proposals that we have brought through these legislative proposals, you'll find that a number of those provisions which were in Finance Bill 2024 have been dropped. The more reason why this proposal should be brought is anchored on exactly what Kenyans are complaining about. And why do I say so? If you look at some of the proposals that we have in that explainer which we gave, and for the first time the National Treasury decided not just to publish to Kenyans for their reading the proposals, but also to give them explainer, because not all Kenyans are experts in matters tax, are accountants, are finance experts, are economists. So we decided to give explainer. If you look at that explainer, which anyone who understands English would read and understand, some of the proposals are supposed to help in giving Kenyans more disposable income, especially the salaried employees. I will just cite a few examples. One of them is if you look at pension contributions. So pension, we have pension contribution by by employees and employers,
right? Because
most schemes are managed by employers. So the contribution of employees and employers, we are enhancing the pension contribution allowable for tax purposes from 240,000, per year,
right,
to 480,000 to 600,000 per year. We are also equally providing, so pension, let me deal with pension first. There is pension contribution.
Right.
There is pension investment, and there is withdrawal from the pension. If you look at presently, it is only pension contribution which was allowable for tax purposes and at a lower rate. We are enhancing that to make sure to give employed Kenyans more money in their pockets, because
right,
we want Kenyans to have purchasing power. Secondly, investments by pension funds are usually not taxable. But now we are introducing another one. If a Kenyan is now retiring and you are going home, we are saying there is no need of asking a senior citizen who is retiring and then going to enjoy his pension. There is no need to require that person to pay tax on pension.
Right.
And I will just give, if you have a little patience, Sam, I will tell Kenyans this, that you reach the age of 60, and instead of withdrawing your pension, you know the law says that someone has to reach the age of 65 to enjoy a tax-free pension. Now, what Kenyans do today, some of them, is to wait for the 5 years to lapse, during which time, maybe because of complication of health, you have died. So you leave your pension behind. We are saying pension to Kenyans should be excluded from taxation, including even gratuities. I will also mention that if you contribute to a registered post-retirement medical scheme, that contribution you make to that scheme should be excluded from tax. And that is because when people retire, you need medical cover more than anything else, because as you age, your body also starts slowing down.
Right.
So I would say, in a nutshell, and there's many others that we'll mention later, some, that we are making these proposals and we have put them out to Kenyans for debate, and that is why we are here today.
Let's just clarify, because you said the pension contributions, you mentioned a figure of 400,000. Is that the correct figure?
No, I said 240,000 to 360,000.
Okay.
Meaning, let me put it in month.
Yes,
20,000
to
is 20,000 to 30,000.
Okay, all right. Yes. PS, you want to add something to that?
I just want to add to what CS has said, and just to say that we now have a national tax policy. We have never been having one before, and that tax policy has objectives. One of the objectives is that we need to begin to focus on the hard to tax sectors, what we call difficult to tax sectors. There are sectors that constitute a huge proportion of our GDP, but when you look at the yields coming from that sector, it's quite low. So the proposals we have put before Parliament is meant also to address areas of making sure that we bring in equity and fairness in terms of taxation, so that everybody is able to pay tax. We are also trying to make sure that we are aligned to international best practice. So we are bringing in issues that we need to align. For instance, we have a proposal on minimum top-up tax and what we call significant economic presence. You find that you have a digital marketplace and an entity is in our jurisdiction without a fiscal presence, but it has significant presence. And so we need to make sure that that entity is able to pay tax in the jurisdiction we are in.
That's a multinational you're talking about?
Yes, it could be a multinational. It could also be just anyone who is in a digital marketplace. And we have defined the digital marketplace. We have tried to broaden the number of services under the digital marketplace. And we have said so any owner of a digital marketplace or an operator is also supposed to pay tax in this jurisdiction.
Who are those? Who are some of those people?
For instance, you have, these days you have Uber, for instance. You want to pick Uber and you have to pay, but you are paying for an owner who is not in Kenya, but has so many, it's very present in Kenya by way of
So
many,
you're saying,
yes.
Is it the Uber drivers or is it the owners of the Uber platform?
We are targeting the owners, and particularly the digital platform where the transactions are taking place. That's one. And then we also are, another area we are aligning.
Sorry, just before we go to the other one. Yeah. So assuming we use the digital cab platforms, of course they have so many drivers. Maybe some of them
example is also food service.
Yeah, let's just stick to that one.
Yeah.
And they are making their money. They are headquartered not in Nairobi.
Yes.
How do you know how much they made and how do you tax them?
This is why we are going into this digital platform, so that we are able to monitor the transactions and be able to make sure that the owner, not the one who is transacting, it's not the user, it's the owner of the platform or the operator. For a long time, they have not been paying taxes, and yet they operate in our jurisdiction. So it's not the Kenyans we are targeting in this.
Okay.
It is also right. In our jurisdiction, yes.
I'll get back to you for some clarification, but Commissioner General, help us. How do you target digital cab platforms from Nairobi?
I think this relates to the question that you had asked PS.
Yes.
Because the whole premise, the whole process of sort of using digital platform is that the transaction actually happens within an internet protocol space,
yep.
an IP space. So what we are working on is there are solutions, there are technology solutions out there that would allow us to have visibility into the transactions that happen within our own IP protocol space. So we are going, for purposes of revenue assurance, we are acquiring those relevant technologies so that we can have visibility of transactions, even for parties that are not resident in Kenya but are transacting with Kenyans within our IP space. So we'll have that visibility and we'll be able to administer taxation.
That's interesting. What does it take? Because, I mean, there are a lot of things that happen
yes.
In the internet space of Kenya,
yes.
With the internet service providers that we have, including new ones that want to come into the market.
Yes.
How technical is that, and how do you ensure that you're able to catch them?
It is a technical process, but there are technical solutions globally. And we are looking at global best practices because we are not the first jurisdiction that is seeking to sort of meaningfully interact with digital commerce. So learning from global best practices, other jurisdictions that have applied these solutions,
yep.
We're engaging and looking at what best solutions we can adopt and bring into this market to allow us to interact with the digital space.
Okay, and just to be clear, yes.
Let's add something onto that. You see, let us face it, Sam. One of the reasons why our revenue, tax revenue collection is not growing with the GDP at the rate at which we want it to grow, some of it is because of the difficulty in taxing the digital economy. We have the agricultural sector, which contributes a lot to our GDP, which is difficult to tax. The informal sector is very difficult to tax. Digital economy is difficult to tax. But that is why technology is employed in tax collection. And you will realize that presently we have been talking a lot about modernizing and improving the KRA IT system. And the system is being put in place. So we may not be the technical people to explain to you what is inside that system, but the system is being put in place. Phase 1 is being rolled out, and we are going to phase 2.
All right.
And we are going to enhance tax visibility, not only in the digital space, but even in to the informal sector.
You mentioned that agriculture is one of the difficult to tax sectors.
Yes.
What provisions in these amendment laws or bills have you put in place to get to that sector?
No, actually for agricultural sector, Sam, and that's a very good question, we don't need much policy changes to tax it. It's basically administrative, and that is why we are enhancing. We are coming up with a system. KRA is getting a system to help us in enhancing tax visibility. That is going to target the agricultural sector. It is also going to target VAT, because we are not collecting optimally on VAT. Rental income tax, we are only collecting 17.8 billion, as opposed to the potential revenue of 100.1 billion per annum. So that is just about 17%. There is also the personal income tax. I always mention this, that if you look at pay as you Kenyans generally, the employed Kenyans, in terms of professionals, are almost equal to self-employed Kenyans. Yet, when it comes to tax contribution, pay as you earn, which is targeting purely the employed Kenyans, is almost 5 times, if not more, personal income tax. Why? Because the tax visibility is not clear on personal income tax. And this system is going to help us address some of these problems.
We'll get back for more specifics. Let's first go across the panel. And Christine, what issues have you seen in some of these provisions that you would say need more thinking probably, but also in terms of implementation?
So I think that's a very good place to start this conversation, because I was looking at the explainer, and I must say I must commend National Treasury for having that done, because that really puts us in a very good place when we go into public participation, a conversation that we always have, because this gives us an aspect of what government is thinking. So the level of public participation that we'll engage in will be better, because we will be providing government with options. You're thinking this is a way, what about we think about it in a different way? So the explainer really sets the stage very well. With respect to some of the issues that we are seeing in the amendments that may really need to be considered, and I'm hopeful that we will discuss that maybe during public participation, is, for example, the amnesty extension. The amnesty extension is definitely a very welcome move, and it has been extended to the 30th of June 2025. And the only challenge with that is that the base still remains as at 30th December 2022. And we're asking, will government consider extending that? And maybe some to provide context as to why this is important is that for me, I practice and I run a farm. And sometimes the penalties and interest are not because I do not want to pay the tax, but it's because I can't pay the tax because of cash flow issues. So I'll give you a case in point. So I have clients, I'll bill them, I'll charge VAT. The tax point for VAT is when I raise the invoice. The tax is due on the 20th of the subsequent month. But my client pays me 3 months later. So I have to go in my pocket to pay for that VAT, and I have to make choices. Do I want to buy stock? Do I want to pay employees? So those are how many of the penalties and interest arise. Okay. So we are asking, can government consider, or National Treasury, reviewing this proposal so that it is extended to at least 30th December 2023. One of the other issues...
You haven't seen that in the proposed amendments?
No, so it still remains, the base is 2022, such that we're only looking at taxes that were due as of 31st December 2022, but the amnesty now operates until 30th June 2025.
Okay.
Yeah. The other area that I would ask government, National Treasury to consider, I see a lot of rationalization of paragraph 1 and 2 of the VAT Act, and this is on exemptions and zero-rated supplies. And I think that has been done towards reducing tax expenditure, which definitely has an impact on it actually has impact on collection, and also it has impact on how much government is able to collect for purposes of spending.
For the sake of the viewer, what are you talking about?
So I'm talking about VAT. I'm talking about VAT on some of the items. So I'll give you some examples. So some examples is, for example, fertilizers and other pest controls. So when you look at the first schedule to the VAT Act and the second schedule, those cover both zero-rated and exempt supplies. Some of them have been moved to 16%, so VAT will be vatable at 16%.
Right.
And some of them will be moved from exempt. So when we say something is exempt, it means you do not charge VAT, but you're not allowed your input VAT that has been incurred to produce that. So most of those have now
Meaning, if you bought something and you paid 16% on it, you will not recover it once you manufacture and sell.
So it becomes a cost of business.
Okay.
Yeah? So if it becomes a cost of business, it means when I'm arriving at my standard cost, I'll have to build on it, put my margin, so my margin is on a bigger base. And therefore, my final price to the consumer will be high.
Okay.
Because now we are we are charging VAT on some of these products. So we are asking...
All right, Christine, we'll come back to that. And I know, Waziri, you want to respond. But let's first hear from the Chairman, Finance and Planning Committee, Mheshimiwa Ekure Kimani. And of course, this has been an interesting year for you. 2024, June, a lot of things happened that we don't have a Finance Act of 2024. Finance Act 2023 had really suffered in the courts. It had been termed to be unconstitutional at the Court of Appeal, but that was overturned by the Supreme Court. So what have you learned in terms of considering, because these may be tax amendment bills, business laws amendment bills, but in the end, Kenyans think about taxation. What have you learned, and what must you do this time round not to face the same wrath as you did in June?
Thank you very much, Sam. And I really appreciate this particular discussion you have in this evening. And And one of the things I will start is this is a good start.
Sorry, Chairman, I think we don't have your mic. Let's try to correct that. But was it you wanted to add something to what Christine was saying?
Yeah, can I just respond to what Christine has said? And I think Christine has raised two pertinent issues which needs a response. On amnesty, I think that is something that we can debate, whether to change the baseline from 2022 December to 2023 December. But we must also balance it off, because again, if you become too generous with giving people amnesty, then it might be counterproductive. It may become a norm. And we also don't want to make it a tradition that Kenyans fail to pay taxes, those who should pay taxes, fail to pay taxes, and you give them amnesty, and then you extend it and you push the baseline continuously. You may end up, people may now start not paying tax.
Okay.
Now, on the issue of zero rating and exemption, it is true that zero rated commodities theoretically should be more cheaper than exempt, because you are supposed to get back. If you sell a zero-rated commodity, you're supposed to get back your input tax. But the experience, Sam, is that this only benefits the unscrupulous business people. And a lot of it does not get passed to the consumer. So what we have done, like, for example, with fertilizer, we are removing it from zero rating to exempt. You will not be paying tax on it. But then, to cushion you against the possibility of increased prices as a result of now claiming input tax, what are the inputs that go into the manufacture of fertilizer? We have also exempted that. So you will not be paying tax on the input used to manufacture fertilizer, and you will also not pay tax on fertilizer. So the effect is like zero-rated.
Right.
I hope I'm understood there.
Okay.
So that is going to solve and cushion
all right.
the problem.
Thank you, Waziri. Chairman, now we can hear you. You were responding on the question of what have you learned to ensure that when these bills get to the stage of public participation, you'll be well guided.
Thank you very much, Sam. You know, the last few months, especially at the period of the finance bill, was a very learning experience for us. It had its very painful pains that some of us had to personally bear for decisions that are not our own, that were on behalf of the Republic of Kenya. But we took that time to learn what lessons we got to learn. One of the things that I appreciate now, and this is something that the National Treasury has really taken responsibility, and as my colleagues have said, is something that we must thank them for, is by first of all owning the propositions made. Because the process of lawmaking, all these particular measures are brought up by the executive. And then once they are developed by the executive, they are transmitted to the National Assembly for processing. So the natural process is that once they land into the National Assembly, they are directed to the relevant departmental committee. And this case, any matters of taxation, raising revenue, and any matter that raises the oversight of any of the treasury units like National Treasury, CBK, KR, and all those matters will be referred to the Departmental Committee of Finance and National Planning. Once that now is done, is read the first time during the first reading, that is the time that now the Departmental Committee does public participation. And let us give ourselves credit. A finance bill has been in existence since the new constitution. But what you realize that you hardly ever got to hear about this. You know, you'll see increases in prices, you'll see changes in our tax system, but the discussion and conversation around them were hardly there apart from the last 2 years, because the Committee of Finance and National Planning made it a deliberate effort to do a very extensive public participation.
Right.
But what now we got lost in the process is that the Kenyans were not able to understand that when we air our views, how do we air them, and how do they account to the final decision of both the committee and of the plenary. And I dare say that if you checked the report that the Committee of Finance and Planning tabled at the National Assembly, and subsequently what was passed through the third reading at the National Assembly that would rather be declined by the President, all the concerns, and I say all the major concerns that Kenyans had on that bill had been taken care of.
Okay.
And that is a process of lawmaking. Pick, for example, the VAT on bread was not fair in the final report, was not fair on what would have been the vellum for the Finance Act, that would have been the Finance Act. If you check motor vehicle tax, that's one of the things that we were working about, that saying, and we actually told National Treasury that motor vehicle tax cannot be anchored under the Income Tax Act, because there is no way of explaining how motor vehicle tax is an income to any person.
Right.
But this time around now, some of the concerns that Kenyans are raising, I'm happy that some of them have been captured by the proposed bill. And even after the publishing of this bill, we continue to receive concerns from the public. And one of the most celebrated recommendations or proposals on the bill has been the extension of the amnesty. But you're asking, if we extend the amnesty and not change the base year, does that really solve the options that you're talking about?
All right.
The penalties and interest that are be forgiven. The question is the administration of withholding tax. Because once, for the withholding tax, especially for government contracts, we have contractors have to pay a particular percentage almost in advance. And so why do I have to mop out my money to this and only have to pay and now start accumulating interest and penalty long before I am actually getting paid for that particular service?
All right.
or product that's supplied? And some, the issue that you raised earlier that I wanted to make a clarification on, and this, we had a very big conversation because this is one of the proposals that was also there on the other proposals on significance, the economics significance presence tax, or what you're calling minimum top-up tax. We have preferential tax areas. For example, Camel Islands in Mauritius and some of these particular countries, where the rate of corporate tax in those countries is at, say, 15%. But the rate of corporate tax in Kenya is 30%. So if that institution comes and operates in Kenya legally through international law, and they carry significant business in Kenya, they will be paying their corporate tax at 15%, especially when we have a double taxation treaty with that particular country.
All right.
So what does that mean to the competitiveness of that company compared to a local company that is paying corporation tax at 30%? And that's where we are saying we need to have a formula of determining what that significant economic presence is, and therefore apply a minimum top-up tax to that particular essence. However, even with the current bill as published, the question is, how do you measure that significant economic presence?
Okay.
And that's one of the questions that we'll be seeking from public participation. And hopefully, by the time we process the bill, now we'll have an answer to that.
Okay, all right. Interesting. That would be looking for the answers from the public participation. But we will do so after the break. We'll be hearing from the audience here to raise some of the questions, the concerns that they have on some of those provisions that have already been spoken about. And we'll continue to even highlight some of the provisions, especially on the tax laws amendment bill 2024. We are back in a moment. Stay tuned. You're still watching JK Live from Leicester University.